Welcome back, everyone. Now, if you have medical debt, you're certainly not alone. According to Debt.com, half of all Americans surveyed carry some form of medical debt. Well, now credit agencies are removing most of those records from your credit report this summer. For more on what you need to know about this move, I'm joined by Ted Rossman, Bankrate.com's senior industry analyst. Thank you for joining us. Now, this is huge. This affects about 70% of the medical debt listed on credit reports. What do people need to know about the type of medical debt this does and does not apply to?
Paid medical collections are going to come off of credit reports starting in July. So that's a really big improvement for a lot of people. Also, these medical collections need to be in collections for at least a year to show up on your credit report starting in July. That's up from 6 months now. And then the other change, which takes effect next year, has to do with the amount of the medical debt. If it's below $500, it'll be disregarded from the credit report. So these are all changes that I think will help a lot of people's credit scores.
And you said in your notes that this is a continuation in how some of these score algorithms give less weight or disregard certain types or amounts of medical debt over the last several years. How significant is this going to be for people's credit scores?
For some people, it could lift their credit score 100 points or more. Somebody who otherwise had really good credit and is dragged down by this one instance of medical debt. And that's really emblematic of what's happening here. There's a push from the CFPB and the lending industry to say, medical debt may be a little apples to oranges here. If it's a one-time, maybe literally life and death kind of situation, that's different than your month in, month out credit card bills, car loans. There's also a lot of confusion with respect to insurance, which is why they're going to have this 1 year waiting period after it goes into collections, giving people more time to sort it out. It reminds me of other shifts, like taking public records such as tax liens and library fines and traffic tickets off of credit reports. I think the industry is moving more towards credit-like obligations, things like buy now, pay later, streaming plans, cell phones. Those seem more reflective of credit risk than things like medical debt and traffic tickets.
And as you mentioned, that's a key distinction because obviously things like medical debt, often unforeseen versus actively pursuing, say, a loan for a car or a mortgage, etc. Do you see perhaps other areas where the CFPB might also scrutinize this and take more things off people's credit reports?
So I think another big priority for them right now is buy now, pay later. We've seen a very active CFPB under the Biden administration, a stark contrast to the previous administration. We recently saw a big overhaul of how overdraft fees are treated. And in fact, many banks have done away with overdraft fees. Now we see the CFPB pushing for more protections surrounding medical debt. I think buy now, pay later may be the next big domino to fall. Not that it's going away, of course, but I think it'll be much more tightly regulated in terms of data privacy, ability to repay. I think it'll be viewed more as lending than it is today.
So with the CFPB estimating that about $88 billion in medical bills is currently sitting on about 43 million credit reports, how do people typically pay this off? And what's the best process to navigate this?
The best process is to negotiate a plan with the doctor or hospital. A lot of them have low or zero interest plans lasting a few years. It doesn't hurt to ask. That's your starting point, I would say, assuming you can't pay it all in full right away. A personal loan maybe is a good backup plan. Same thing for nonprofit credit counseling. I would stay away from putting this on a credit card. The average interest rate there is over 16%. You don't have the same credit reporting protections that we've been talking about. Credit cards are really a last resort.
So then, since the debt does still exist, just not on the credit report, will people be motivated to pay off that debt? And how are some of these creditors and insurance companies reacting to this?
I think they will be motivated. I mean, it's a fair question that others have been asking as well. But I would say that because it's paid collections that are coming off, there is that incentive. And that also brings this more in line with recent versions of the FICO algorithm that have deprioritized medical debt and also de-emphasized paid collections of all sorts. I think there is an acknowledgement here that a paid collection is way better than an unpaid collection. And in fact, medical debt doesn't usually show up on your credit report at all until you've gone to collections. And then you get hounded by the debt collectors. And so that's where I think that there is still a motivation to pay it off.
Well, hopefully this does ease the minds of people sort of seeing those bills piling up and wondering what they can do. We do appreciate your insights today. Thank you so much. Ted Rossman there, Bankrate.com's Senior Industry Analyst. Thank you so much.